Hi Sumit, hi Ankit. Thank you so much for joining us on Blitz Business. It's a pleasure to have you guys.
Hi, Ashish. Thank you for
Hi,
having us.
Ashish.
Awesome. Let's get started. Before we deep dive into business, I would like to know a little bit about yourself. Sumit, if you can share us a little bit about yourself, then we jump to Ankit and talk business.
I'm a postgraduate MBA, passed out in the year 1999 from ITM Mumbai. Always had the entrepreneur, you can say, stint in me. So straight out of the MBA, I started my first venture, which was into the FMCG sales and distribution space. So we started working, set up a firm, started working with various large FMCG players like Parle, Perfetti, Karamchand Appliances, to name a few brands like Perfetti, Fruity, and All Out. So we started handling their geography specific sales and distribution network. Along the way in this journey, I also got the opportunity to have a short stint with an EPC company and had an experience on the commercial side of how the nuances of a small EPC company works. So with these two ventures, almost a decade I spent and exited both the ventures for personal reasons. Then I started my corporate journey, had a long stint, almost again a decade, with a company called Power to SME. And they were into the B2B distribution space, or you can say the SME lending space later on. So that is where Ankit and me, we both met and crossed paths and discussed on what more we can do. So I'll leave it up to Ankit now to give his background and go
Sure.
forward.
Sure. So I started my career in 2006 with SBI Capital Markets Limited into investment banking. That was straight out of my IIT days, IIT Kharagpur, where I graduated from. 2006 to 13, I was handling majorly all large corporates, debt syndication into steel sector, power sector, metals, and renewables, etc. Everything. Till 2012-13 good, but I wanted to do something different, and I ventured into e-commerce and launched an e-grocery company by the name askmegrocery.com. So if you have heard askme.com, I was the co-founder of that as well, and there we built it. As by 2015 it was the largest e-grocer of the country, larger than Big Basket at that point of time, 350 crores of GMV, 35 plus cities, 3000 people in the company. So it was at a different level, but due to some unavoidable reasons, we had to shut it down and exit in 2016. And in 2016, when I exited, I joined a company which was into steel manufacturing at a corporate level, CXO level position, and eventually became the group CEO of that group, which was into steel manufacturing, hospitality, had three plants across North India, West India, and Middle East, handled sales of around 5,000 crores. And that is where you can say Sumit was on the other side of the table, helping us in the working capital side. And I had that operations and credit experience. So we thought of, let's launch something which the others haven't done yet or haven't tried to disrupt yet. So that's the reason AKSUM was born, with an intent that, okay, let's do something different into supply chain, which others are not.
So it sounds like a very terrific team, supercharged, super packed, with a lot of experience. So one question then which comes to my mind, Ankit and Sumit, and we get this question a lot from our fellow entrepreneurs, budding entrepreneurs, someone who is looking to start. How did you guys got this idea? How did you narrow down? This is okay. So I bring this experience, you bring this experience. Like what do we gonna do? Like how do we sort of arrive to a conclusion? Like this is let's start this. What was the thought process?
Okay. So, see, first of all, definitely I'll say we are a different breed of startup. A reason being that we are quite experienced and then launched another startup. So, I'm going for a second startup. Sumit also was kind of a, you can say, in the founding team only of P2S. So, he also handled a startup. So, we had that startup experience already. That what were the mistakes that were done in the previous startup? What are the, you can say, do's and don'ts, what we have to follow in this startup? And we had our own set of competencies. So, that was the number one formula, you can say, that Sumit was strong in the networking side, in the business side, in the operations side, bringing in loads of experience of his EPC and all. and I was good at the credit part, the risk part, the banking part, the fundraising part. So I had a different flavor. So that's the reason we thought that okay, right till now, what are, and it was our own life experience that we were dealing with companies like Power to SME, OFB, other companies. We were dealing with all those companies, and we were seeing from right from our eyes that okay, this is something which is not sorted yet. So zeroing down was basically that okay, this is done, this is done, this is done, but this is still pending. Let's start something which is into this space, and let's do something which is different.
In one line, if you like to share to our listeners, what do you guys do? What is the problem you're solving? And if I'm able to pronounce your name right, it's called AKSUM.
Some.
AKSUM. Got it. All right.
Yeah. So you can say in one line, we are the bridge between the small SMEs and the large corporates.
And providing what exactly the service?
So we are providing the sales and the procurement services to the small enterprises and to the large corporates.
Any specific products or what exactly when you say?
As such, we are sector agnostic, but yes, we are good in steel, scrap, aggregates, etc. But as such, we are sector agnostic.
So then it will be similar to what infra does, like you are tapping into that sort of territory, right?
There
So
are a few overlaps on that, but at the very core level, different thought process and approach to the industry. Infra.market is more of a manufacturing enterprise now. They have their own white labels, as well as they have taken up ownership of a lot of plants, factories around India, within India, and are getting the manufacturing done in their own name. While AKSUM is a asset light model, we do not own any assets in terms of either inventory or in terms of factories or plants. In fact, we help companies, large corporates buy in a very seamless manner from the smaller enterprises. And we help those smaller enterprises scale up their operations by integrating into the supply chains of the large corporates. So that is basically the difference that we see in both the businesses.
So help us walk through like a journey. Typically, traditionally, why will the consumer shift to you guys for procurement? Like, what is that journey looks like before and after you guys have stepped in?
So if we talk about, there are a few value propositions that we would like to highlight that a customer, in this case, a large corporate, actually gets when he's dealing with AKSUM. So typically, or the traditionally way, if you see any large corporate, whether it is into the manufacturing or into the infrastructure space. So let's first talk about the infrastructure space. So any large corporate, if they are working on multiple projects, multiple sites across India at any point of time. So the problem statement for their supply chain team is, or you can say not the head office team, because head office teams or the centralized teams usually deal in bulk materials with bulk manufacturers, and they have those tie-ups. But at site level, the problem statement is that there are just-in-time requirements. There are requirements which are below the MOQ level of the large corporates, with where you need to buy from the unorganized distribution space or the dealer, the retailers, and the small size, you can say, businesses. So that is where the problem statement starts for them. When you have to buy from an unorganized sector, which is scattered, which doesn't have, you can say, right now in terms of very savvy towards the technology or integrating into the compliance requirements of those large corporates. So all these factors ultimately lead to a lot of inefficiencies that they face while procuring from the small size enterprises. And those inefficiencies ultimately have a direct impact on any project's costing and profitability. Now with AKSUM, what happens is that multi-location, AKSUM operates across the country. So multi-location, multi-brand, multi-product. So if you have to buy steel, you can come to AKSUM, while traditionally you would have reached out to 10 different steel suppliers locally which are present there. Then if you have to buy cement, again, you will go to 10 different cement suppliers locally. While with AKSUM, you can buy both steel, cement, aggregates, and other products that we deal in. So as a one-stop solution, the efficiency of the regional procurement teams increases multifold because they don't need to run across many players. They have to do compliance only at one company level and then start their procurement system. While the benefit now look at from the supplier side, these are few of the benefits that the large corporate gets. Then from the supplier side, if you look at it, any small supplier, if he wants to supply to a large corporate, there are certain, you can say, checks and balances that he needs to first fulfill the turnover criteria or the certain compliances that, and those become hindrances for them to grow across many corporates because one, they are as such small, they don't have the manpower to handle 5 different corporates compliances or 10 different corporates compliances. But while with AKSUM, once they are integrated with the AKSUM supply chain, through them, through AKSUM, they are able to simply have the visibility of the requirement across many players in the country and are able to supply through us.
So with, like, for example, in a particular area or a region, you guys have 10 cement players. How do you pick and choose from whom to supply the material or whatever it is? Like, what's the process then? It becomes a little difficult, I guess.
AKSUM, yeah, Ankit, can you take this?
Yeah. So what happens is, see, we are not buying from the cement manufacturers. We are buying the problem. We have flipped the problem. So we are solving the issue wherein we are supplying to the large corporate and we are taking on goods or procuring from the small corporates, or you can say the distributors or the SMEs. Now what happens is we have our on ground team which are onboarding the suppliers and the customers on a regular basis. So for any particular RFQ of, as you gave an example of cement, so somebody, a large corporate requires some cement now at a particular site of theirs. So what will happen is that our system, it will generate, okay, these are the matching vendors or the suppliers who can supply cement to this location. They have fared well in the past with us while transacting and all everything. And then we will post that RFQ to those set of suppliers, maybe 5, maybe 7, whatever the numbers we have in our system, and that keeps growing day by day. So we get bidding done basically amongst those vendors, that okay, they submit their prices and all, and whosoever has given a best price, we buy the material from that particular person after negotiating, and simultaneously on a real time basis we lock the PO from the customer as well. So we do not hold any stock, we do not hold any commodity risk, we do not have any godown or a physical presence. So it's a completely that we buy and sell on a real time basis on our platform. So that's the way where we zero down, okay, this is the particular supplier from whom we should buy this.
Understood. I think there is a lot of excitement in this space. Even I was reading some news. I think even Aditya Birla Group is planning to enter or have entered. I'm not too sure. I didn't follow
See,
through.
everybody,
Grasim.
yeah, so Grasim is the name. Everybody who is entering into this space or have entered in the past, all of them have a common value proposition of lending. That okay, their value proposition or USP is that credit, they will give credit to the customers. So the way I can say, when I was in my earlier days in my as a CEO, and Sumit used to come to our company as a working capital lender. So the value proposition that P2S also had was that okay, we can provide you this much funding on your books or at this rate of interest, or to your debtors, to your customers on their books at this rate of interest. Similarly, OFB, similarly, Aditya Birla, similarly, Infra Market. So everybody was working around that space because they were unable to crack the space wherein we were solving a real problem of a small corporate. Because buying from a large corporate and aggregating the demand of small corporate, it's not easy. Till date, nobody has been able to do it because there is a vast distribution network already in place. So if you talk about JSW has its distributors all around in India, and not now. They are 30 years old, 40 years old, 20 years old. So it's difficult to crack those people and replace those people and say that, okay, I'll enter into their distribution network. But the other side was a neglected category wherein you buy from the SMEs and you sell to the large corporates. So that's what you can say, we disrupted the market. Okay, let's work around this problem, and that's a win-win situation for both of the stakeholders, you can say, because the small corporate, for them we become valuable in their life cycle because we are increasing their sales, we are broadening their horizons, we are broadening their you can say the geographies, that yes, we can sell to these
The
large
reach.
corporates. Okay, their reach, they can reach those people, or they can reach those corporates through us where they would not have been able to reach themselves. So that's the real empowerment of the SMEs, I would say, that we are facilitating.
Then let's talk about a little bit on the financials. So, for example, I assume it's a thin margin business, right? And so two parts to it. So how do you guys make money? And second is, have you guys raised any capital? Being asset light, I guess you don't need much, but correct me if I'm wrong.
Okay, so yes, you are right. The margins are thin, but that was another learning from our earlier days, that we are not going to do any business which is cash burning business. And if you see any of the other balance sheet of so-called similar companies, everybody was in red at least for 5 to 6 years from inception. And it's good for us that right from day one, from inception, we were in green. We were PAT positive, EBITDA positive all along. Each transaction was positive. We never burnt money. The reason behind that was that we were sourcing from a small corporate, and we were selling to a large corporate. Large corporate or the market decides the price, which is the selling price. But the margin is always derived when you are procuring at the right price. So the margin is when you buy cheap. You cannot sell costly. Selling will always be on a market price. So we are able to efficiently make that margin by buying the goods from the small corporates and selling those goods to the customer. So we AKSUM in between it, it gets the invoice from the supplier in AKSUM's name, and AKSUM then sells it to the customer from AKSUM's name itself. So we make that margin in between, which you can call a trade margin, a credit margin, a total services margin. So that is what AKSUM makes, and AKSUM is able to increase that margin day by day by entering into new categories, by making the procurement more efficient. As we grow on scale, so we get more discounts from the suppliers, and we try to do the upfront payment so that their working capital issue is sorted, and they give us the best price, whatever the price is possible in that area. So that's how we make our margin.
And what's the
As
best?
far as
Yes, Sumit, please. Go ahead. Yeah.
So on the funding part, we bootstrapped the company, both Ankit and me initially. We put in our own capital. We raised some quasi equity or from friends and family. That is how we scaled up in the first year of our operations through our own bootstrapped capital. Since, like Ankit said, we have been profitable from inception. We got the backing of financial institutions, and they came on our books as lenders to us. Also, we raised our first round from IPV Ventures, which was in March 2023. That was almost 15 months after we started operations. So they came in, they invested into the company. We raised close to around $500,000 plus dollar from them as seed capital. They invested into that. And then 6 months to 9 months down the line, FARD Capital. They also, in fact, were interested at the first stage in March 2023, but somehow they were a little bit slow in the process. And by that time, they came back to us. We had moved away from the startup definition because they were investing through their CAT fund. But since we had already gotten into discussions and had finalized some terms, so we agreed to give some direct entries to their set of investors into the company, and we raised close to around 1 crore from them, which kicked off another preemptive round for IPV investors, and they also put in another 1 crore. So that is the 3 rounds that have happened, small rounds, close to taking the total raise to close to around $1 million of equity. Plus, we have raised for the growth part, we have raised capital in form of debt and various discounting lines from all the marquee financial institutions of India, whether it is SBI, ICICI Bank, HDFC Bank, Yes Bank. And in fact, even international banks like DBS have supported us in our growth journey by lending capital to us on a no recourse basis. So all in all, that has been how we have been able to scale up in the past 3 years of our operations.
Wonderful. It will be mostly used for working capital requirement. I assume there will be some delays happening in invoicing, cash coming in, cash going out. So is it that is for that purpose?
See, what
That's the
happens
growth
is,
part. Like, yeah, Ankit.
so basically, in a trade, whatever the trade happens, even when you are selling to a small corporate or a large corporate, there is always an element of credit in the working capital which is involved, that you have to give to your customer. We, because we want to increase on our margins, we deliberately we try to do upfront payments to our suppliers, and get the maximum amount of discount. But on our customer side, we have to give some kind of credit period. But the good part is that our credit risk is very low because we are working with large corporates, number one. Number two, we have taken credit insurance from Tata AIG for any potential default on from any of the customers. So we have going a risk averse way, whatever possible. So to bridge that gap of you can say the receivable versus the payable, so we have these banking institutions working alongside with us, and we are doing a matching kind of a work with all the institutions that okay, this institution can give a non-recourse line, this institution can give a factoring line, this institution can give a sale invoice discounting or a purchase invoice discounting or a WCDL or a CC, or so we have all kind of you can say structures which are there in the banking lines we have on our balance sheet, off balance sheet. So we are working alongside that and making the margin. So we have the cheapest source of capital, best customers, and you can say the least overhead suppliers in our value proposition.
Wow, this sounds really fascinating. And I think it's a fine balance. You guys break us down for us. For example, the debt which you have raised, I assume it will be in double digit, and the bulk discount here. I mean, it's a very fine interplay between two. So how are you guys managing? What's the experience so far? You come from the background, I'm sure you know the stuff, but help us understand how is it working?
See, the banking part, yes, we had prior experience into that, so we were able to raise debt capital. But yes, it had to be collaborated with the business that okay, how the business can earn the margin and keep on increasing day by day. So that is what we have been thoughtful of entering into new areas. First, we established our own forte into a particular sector. So we started with steel. That was our you can say forte for both me and Sumit and our team as well. So when we first established forte into steel, then we started moving into the niche areas of steel sector, which had more margins than the mundane steel kind of thing. Then we entered into the circular economy part to into the scrap part. That okay, we are buying the scrap, converting into steel, and we kind of increase the margins day by day by getting the bulk discount from the suppliers and getting volume incentive also from our customers. So thereby we increase our margins day by day by entering deep into a particular category or introduce another category which we think is promising and has good prospects in future, like the we entered the scrap, then we entered into the rock segment, which is the aggregate segment. We entered into another segment called MRO, which is machinery repair and operations, the shop floor items. So we are constantly entering into new areas as well. We are exploring the cross border trade as well, which will have more you can say margins going forward. And plus, we are also starting with contract manufacturing or cloud manufacturing, we must say, wherein we have the raw material control, we have the sales control. The only part missing in our value chain is the operations or the manufacturing part, so which we are outsourcing and getting it done through the suppliers, through some manufacturers.
And just one more question on this topic. So, steel, I understand there are certain commodities which are cyclical, right? And your debt is fixed rate, I assume. So, how do you manage that sort of issue
See,
coming in the price of
See,
commodity?
it's simple. I mean, we do not take any price call. So we are not into that cyclical nature wherein we are holding any goods for any period of time. We do not hold inventory for even a single day. So even if the price is falling or the price is increasing, it does not affect us because we have back-to-back contract. So we are selling and buying at the same time on a real-time basis without exposing ourselves to any kind of commodity risk. So the margin is fixed on each trade, and for that fixed margin, we have a fixed ROI which we are paying to the bank also for the cost of capital. So it's a apple to apple comparison.
So then moving onwards, so are you guys now planning for any Series A? Since seed definition is very tricky to say, but let's say Series A.
In fact, we straight away moved from pre-seed to Series A through. We have reached a scale where yes, now we will be launching our Series A round in April, in the new financial year, once we complete those financial year. So we will be going out to the market to raise the next round of capital. That is on the horizon.
And what is the where will it be mostly deployed? Operations or expansion or the new activities or tapping into adjacency?
It's primarily for growth only. So it will be to expand our geographical presence as well as our category expansions, both vertically and horizontally. We are looking at, like Ankit said, we are also now venturing into cross-border trade, where it will require for us to have some physical presence, geographical presence outside the country also. We have zeroed down on Middle East and Southeast Asia. That way, we would like to be present for the next level of growth. And plus, we are constantly upgrading the technology that we are creating for both on the customer side as well as on the supplier side. See, ultimately, Ashish, what we are looking at is building a platform which will cater to the whole ecosystem of supply chain. So when we talk about the players that are involved or the, you can say, stakeholders of the supply chain, there is the customer, there is the supplier, there is the financial institution, there is the logistic player. So all these ultimately will be on the platform, coming to us, going through the transactions that are flowing from the platform. So to give you an example, we are working with many financial institutions. They can come, look at the transaction data of the customers, decide on which customers to fund as per their own internal policies. They will have real-time data of actually every customer who's transacting through the platform. Plus the logistics, since there is actual material movement that is happening across India. So the logistics players ultimately, because we have seen that in the past 3 years that the logistic cost within our overall cost of the product amounts to almost around 1.75 to 2%. And there is scope of bringing it down with the aggregation of routes, aggregation of volume that we are able to do. So ultimately, the logistic players, the third-party logistics can bid for those routes that, let's say, between Delhi and Mumbai, X volume of steel is moving or X volume of products or X number of trips are happening, and they can bid for those trips. And ultimately, the advantages get passed on to both the customers as well as to the suppliers. So that is ultimately what we are building for. And that is where this technology enhancement will be required to ultimately take shape as a platform. And that is where part of the capital that we plan to raise will be deployed.
And logistics is also handled by you guys. You deliver the product, or is it the?
So it's managed by us, where we oversee either the supplier or the customer's logistics, whatever they are deploying. In some cases, yes, we have started taking ownership of the logistics also, but that is still less than 5% of the total trade that is happening.
And
But
investor
we see that going up.
investor agree with that piece, sort of you handling logistics. Typically, they.
So we do not want to handle logistics. We want to actually be creating a revenue out of the logistics that is happening in the whole trade. So that doesn't mean that we have to handle logistics. We have to create our own fleet. That is not the thought process. It's about creating third-party partnerships where those partnerships ultimately add to the bottom line of the company.
So you guys classify yourself because I see two flavors to this business. One is like a completely financial. You can be classified as a financial services. No.
Not really. That is not something that we are building the whole business on. Financial services is not our forte. That is not our game plan also. The game plan, like I said, is that every stakeholder involved in the supply chain of any product is ultimately on AKSUM platform and looking at a piece of the business.
So what is the most top two, three or categories which is highly profitable, which you guys enjoy? Dealing more with that steel, cement, whatever it may be. Like, what are those top three categories so far in your experience?
So on the revenue side, if we talk about the top three categories for us would be steel, scrap, and polymer.
And is there any other way to classify it also, or only revenue is a filter in terms of profitability? Let's talk about it in terms of profitability, top three categories.
Then in terms of profitability, if you talk about, then I think construction products, MRO, would be our top two categories. And steel, obviously, certain pockets of
Niche steel, yeah.
segments of steel,
Yeah.
specialized steel.
What is a specialized steel, for example?
So where some value addition has been done in terms of the either the chemical properties or you
The
can say the physical
coatings,
nature of the product.
it's basically coated steel or some electrical steel, so some specialization of steel.
Understood. In this entire space now, how do you look, Grasim or other players in this space? Is the market big enough? I mean, you definitely told your differentiation. Other players also maybe entering, smaller players, whatever. Like, how do you look the entire spectrum, this entire market?
So, see, this is basically an extension to your previous question itself, that we do not foresee ourselves as a financial services company. And most of the companies which are entering into this area are basically eyeing that financial services, and they are actually competing with NBFCs, and at a given scale, they might be competing with the banks as well. That's not our value proposition or our game plan going forward. So, we are trying to concentrate more and more and building more network with our suppliers and vendors, and basically coming out with a platform which is enabling the trade, which is onboarding the customers, onboarding the suppliers, onboarding the logistic players, onboarding the insurance players, onboarding the bankers, the FIs, and we enable the entire trade fulfillment on our platform. So we do not want to act as a financer to anybody, we do not want to act as a logistic provider to anybody, but we want to enable everything for a trade to be fulfilled. So imagine like a BSC NSC kind of a platform where a trade is happening, but it's on a speculative basis. It's not a delivery based thing. But here the order will be delivered. There is a physical movement of goods, and there is an exchange which is constantly running. So that's what our future game plan is, to get into that platform.
Also, to add to the market opportunity size, if you look at the overall commodities, if you look at steel in isolation, then steel is a $75 billion market in India. And that is only, I'm talking about the manufacturing that is being done, worth 75 billion. Now look at the supply chain from the manufacturer to a large distributor to a dealer, then to the consumer. So it passes through three layers of supply chain. Similarly, if you look at polymer, similarly, if you look at chemicals, the circular economy of scrap, if you look at consolidate all that, it's a $500 billion market size as of now at a primary level, not even looking at multi-layer supply chain. So at a primary level, if we talk about $500 billion, and if we say 50% of that is something as an addressable market for us, then we are looking at $250 billion, at least as a market opportunity size. And in the last 8 to 10 years, with all the B2B companies that have come in, and if we look at the total turnover of all those B2B companies, that would be close to around what? Maximum $10 billion, 4% penetration of the total opportunity in last 8 to 10 years. So going forward, there is a huge, you can say, potential for every company, including AKSUM. It's basically on which path you want to do that penetration, whether you want to be on the supplier side or you want to be on the finance side, is every company to its own.
So this also sort of made me started thinking in terms of government is a big spender, right? In this space, infra, everything, right? And they have a big plan. They were already spending a lot. So is that also a space you plan to operate or already operate in?
So government procurement primarily is done through GEMS portal. So that is another area that we have identified that we should be present there, because most of the procurement pertaining to office supplies as well as to the non-core items across all government departments is happening through there. And we are already into the MRO space. So that is something that we are looking at. When the large ticket size items start happening, then we would be ready for that as well. But you are right. Yes, government procurement is one key sector that we have identified that we should be there.
Yeah, because for smaller companies, I think that will be like unlocking huge opportunity for them. They can,
Yes.
It is.
it's a tedious process, right? So awesome. So then, in terms of what are your biggest challenges? For example, every business has a challenge, right? So I'll ask each of you, Ankit, top three challenges from your perspective, Sumit, and top three challenges from your side. I know it will be different. I hope so.
Should be. So, top three challenges I would say first is keep the growth momentum, because it's a fast paced world, and the momentum has to be there. So, keeping up with the growth every year, a 2x growth is the biggest thing, that the all ingredients for that should be available, be it the capital, be it the business. So, all those things. That's the first challenge, that keeping the growth momentum. The second is, I would say, getting hold of good resources. Resources by means I mean the human resources, because we think that people are the biggest assets that we have in AKSUM, and if we have a good team and we are able to retain the right people, then we can do it. The third, I don't feel there is any other challenge. I mean, two are enough.
Sumit?
So I would agree with Ankit's human resource. I would say that that is the top priority for any company that needs to scale up. We have done the first level of scaling up. We have reached a top line of 400 crores. Now, from 400 to 4,000 crores is where we need the right people. We have the right people,
Mm,
but now we need the next round of right people to actually help us scaling up from 400 to 4,000 crores. So that's our biggest priority. I would say that as a priority, not as a challenge. But yes,
mm,
it sometimes become as a challenge when you don't find the right people. The second biggest priority for us is the right set of suppliers for us, because they are critical partners to us when we are uh, going and hunting for business in the market. So if we don't have the right set of suppliers, having the best of the customer doesn't make sense. You can work with the best of, have a huge requirement, but if you don't have the right supplier through which you can fulfill that requirement, then obviously things will not materialize. And the last, you can say, for us is, yes, that how efficiently we are able to manage the credit in the market. When we are offering, we are working with all the rated customers, big customers. But then sometimes the macro environment usually takes a turn which ultimately makes things out of reach or out of hand for every stakeholder involved, whether it is the international tariffs, whether the wars, or any kind of a supply chain distribution, which you cannot foresee. So these three factors, I think, are the biggest things that we need to keep in control. Ultimately, from 400 to 4,000 crores is a matter of years for us, couple of years.
So one thing I really find interesting is, so unlike almost now 200 founders, entrepreneurs has come, and each one of them has mentioned challenge of hiring the right people. And I'm like, we have so many people, and still all of us just struggle to find the right person. This population in India, right? Everyone has mentioned right people. And when you mentioned, Sumit, in terms of the right supplier, so is it like the quality issue you guys face, or you also do quality inspection? I'm not too sure. Like, what angle of right? Like, what is?
So, right suppliers means ultimately, one, you obviously need to have a wide array of suppliers or a wide number of suppliers, because when we are dealing with large corporates, their requirements come in huge numbers. So you cannot be dependent on some limited number of suppliers. So obviously, when I say the right set of suppliers, is suppliers who have the capability to deliver material, the right quantities, the right qualities. Ultimately, those suppliers are also not manufacturing those materials. Most of them are, again, part of the supply chain. But still, India as a country, or people of the country, still are getting into the, you can say, the mindset of having a professional approach in that whole business, you can say, relations. So sometimes we see those things are missing. Sometimes those things ultimately derail the things also. But that is something that we are seeing, that slowly and slowly it's getting better. Not quarter on quarter, but yes, year on year, yes, the quality of suppliers, as they keep on getting better, getting associated with us. So the growth is easy to maintain.
And does the quality issue lie on you guys? For example, if there's some issue in the delivery, so it is you, then it's within your cost. You have to replace, recover, whatever. I don't know.
So if it is a standard product, a standard packed product or standard produced product, then the quality parameters of the manufacturer's liability come into play, because they come with their test certificates and everything. And if it is not something which is standard, like in the circular economy, there is scrap, which is not a standard product. So there are third-party inspections that are taken pre-shipment, that are borne by us. We do those, organize those, and bear the part cost by the supplier before loading, so that it ultimately delays, or it ultimately eliminates any kind of, you can say, rejections that flow into the business cycle. So those third-party inspections are there wherever it's a non-standard product. But if it is a standard product, then we go with the supplier as well as the manufacturer's quality certificates.
I think it's really fascinating and how the space will turn up eventually. To wrap it up, one last final question for each of you. Again, so one thing you guys would have done differently, knowing whatever all the knowledge you have in this business, don't tag along with the same answer, whoever goes first. I need a different answer.
So you should have given us this question beforehand so that we are prepared. But what we could have done differently, I think in the first 3 years that we have been operating, frankly speaking, I don't think there is anything that we would have a different playbook of this thing of last 3 years.
Okay.
In hindsight, usually people say there is something that I could have done differently, but frankly, I don't think there is anything that comes to my mind, at least. I don't know, Ankit, if he could have
Chalo,
thought
so
something of.
so whatever I say, so I'll have a different answer if I don't say no. So as per me, something differently could have been, we could have raised much more capital initially before starting the company, and then maybe go ahead and do the business. So the scalability would have been much better. But all have pros and cons. It would have led to a dilution, which me and Sumit wouldn't have liked, and all that stuff. But yes, if you have asked one thing, just to give that answer, that okay, what we could have done is something what I've told.
Scale
So
much
pros and cons are there, yeah.
Yeah.
Awesome. And I just realized, so the name AKSUM is from Ankit and Sumit. Have you guys combined it? That's how you arrived, or what
We
is it?
thought we thought it would be your first question. That's the reason I was wearing the T-shirt also of AKSUM today.
Like my eye, like what's happening in the name?
Actually, no, but it's a coincidence. You can say AKSUM is actually was a thriving trading empire which lasted for a couple of centuries. It was in the present Ethiopian region, in the African region, where it was a very big trading empire. AKSUM, the city. But yes, it's a coincidence that it matches with our initials as well, Ankit and Sumit, but not the genesis.
And the trading empire is now being reawakened, reignited.
So it's a
Yes,
modern.
modern modern AKSUM.
That's nice. That's nice. That's a nice story. I'll look it up, AKSUM, and read more about it. But thank you so much, guys. Ankit, Sumit, it was such a pleasure talking to you. It's such a fun space to be in, I think, and great execution for now. 400 crores, not easy feat to achieve. I wish you all the really best. Thank you so much for your time.
Thanks,
Thanks,
Ashish.
Ashish, for
Thanks
having
for all
us.
the good
Thank you.
questions. Thank you.